Hey, Eric, we're ready.
It's hard. He's always good beside. It's hard to get a good crowd of these. More fun to look at the paint. It's listening to this stuff every day on something I read about it. It's live.
Good morning. Welcome to the Indiana Farm Equipment and Technology Expo. I'm Andy Eubank with Hoosier Ag Today, and we're streaming live on our YouTube and Facebook sites. And we are live at Grand Park in Westfield, Indiana for a market outlook round table. And we ordered up a round table specifically for this event. Thank you for joining us, and we'd also like to say thank you to our sponsors of our seminar series here at the Expo, Ag Direct, Farm Credit Mid-America, and Bain Welker Equipment. And joining me for the Market Roundtable, a couple of, dare I say, old-timers, or I'll say long-timers. I won't use the old word, but I do say old-timers and long-timers because they, as the months go by, seem to remind me of that more and more all the time, how many years they've been doing this. So we are moving from our previous seminar on drones to a couple of guys that are going to drone on about the markets. Fair enough?
Andy, that is fair. And actually, the previous session was about new drone technology, and what you have now are two old drones.
So we're going to go for it anyway. Mike Silver is with Kokomo Grain. Mike, how many years doing this?
Well, this is 50 years, 50 years.
It's a long time.
A long time.
Long time. Glad you're with it.
And that's if you count the professional career. If you start when I first started in the grain business when I was 12 years old, reading temperatures on an old Rolfus temperature reading machine at the old Lafayette grain terminal in 1963, that gets her closer to 60 years. So long time.
We could hear stories like that and never get to the markets. You realize that, Mike?
I could tell stories all morning long. Yeah, you'll have to restrain me because I'm going to tell a few.
John Zanker is with Risk Management Commodities in Lafayette, and I think it's 40 years in your case, John?
Yes, it'll be 41 in May. Started originally with A.E. Staley, the old A.E. Staley, Decatur, Illinois, and worked my way east and started my first marketing company in 1988. So been doing it a while.
Okay, glad to have you both here, and I'm going to move around a little bit to the outside so that I can look at you as we speak. We're going to talk about the coming year. We're going to also kind of look back first at this year, and it's been, I think you can say, volatile to say the least in the markets. I was looking this morning at current front month contract in corn and beans, well over $1 above where we were a year ago, $1.50 in the case of corn. So we've reached some new highs, obviously, back in May and June. We're off of those, but doing okay. But it's been a wild ride, John.
Well, I think the last time Mike and I were on stage together would have been right before the COVID.
That's correct.
Maybe a couple years ago. And of course, prices were terrible at the time. I talked about my fear was that we were going to have November soybean futures drop under $8. And I think we were on our way to doing that. But we had a hurricane in Iowa in August of 20 and or 19. Let's say 20.
20.
And we had a drought in the Western Corn Belt that really took a lot of bushels off corn and soybeans. And then the next thing you know, China's going crazy and buying, and we're instead of going under 8, we went to 15. So it's just been a pretty spectacular ride. And now we've got some things that could go right. We have some things to go wrong, and potentially. So we're in, buckle up. We're in for another wild ride here, I think, in the next few months.
Mike, quick review on the year from your perspective.
Andy, I've told several people that to harvest 21 is a harvest of two tails. TAIL and TALE. The TAIL is the length of harvest this year. Our first receipts at our Kokomo grain elevators across Indiana started September 2nd. And believe it or not, for all practical purposes, harvest is wrapped up now, but we still have a few fields of soybeans and corn that need to come to town yet. Now, they're not significant acreages, so we'll call it a wrap. But you know, it's been a number of years since it was post Thanksgiving before we completed harvest. So that's the TAIL, a long tail on this harvest. The other TALE, the tails of this harvest. I'm proud to say now I'm a great grandpa, first time around. And this harvest, there's a lot of stories that I'll be able to tell my grandchildren and my great grandchildren if I can live long enough. There have been so many factors this fall, started in the late summer, that absolutely came out of the woodwork. We had great expectations for record yields going into harvest 21. In the early part of the summer, on timely planted acreages and good weather, you know, the forecast was for U.S. record-breaking yields for corn and soybeans, and U.S. and Indiana record-breaking yields for corn and soybeans. Well, nobody consulted Mother Nature as we went through some of that deliberation, and she threw us some late growing season curves in terms of some droughty conditions across parts of the U.S. and Indiana, and some rather moisture-laden events across the U.S. and Indiana. So although our yields in Indiana and across the United States were very, very good this year, we really didn't set the records that we had anticipated. So not quite as favorable an outcome there, but I will have to say in terms of prices, the price levels this harvest from a historical standpoint were very good. And John, I think you'd agree with me, as we progressed through harvest, we actually saw some appreciation in futures prices for corn and soybeans. And folks who had not made forward contracts earlier in the year were actually able, at harvest time, right across the scale, spot sales, to make some really nice corn and soybean sales in addition to the sales that they had made earlier. We had a hurricane affect our ability in New Orleans, in NOLA, in our busiest export shipment system in the early part of harvest, that prevented us from being able to export. So we hit some obstacles in our export program and our ability to ship corn and soybeans. And that created a logistical backup that was further exacerbated by the fact that we've got a global transportation challenge in not only ocean freight because of COVID, the influence of COVID. We've also have it in our truck transportation system. I know, you know, we operate in Kokomo Grain. The majority of our elevators are rail shippers. We ship grain by rail. We also hire trucks. We don't own any trucks. We have to hire trucks to hit the domestic truck market. And railroad performance this fall has been substandard, which meant that there were some delays. It forced some elevators not to be able to be open as long as they had hoped to be. And that caused harvest to be protracted. And of course, the COVID, you know, the variants of COVID, the Delta variant, and now the Omicron that continues to affect families across the globe. And certainly, I'm here to say this morning, you know, I've lost family members, I've lost friends, I've lost customers to this COVID dilemma. And unfortunately, the world is still facing challenges in that regard that not only have impacted Harvest 21, but are going to impact this coming year.
John Zanker, anything to add to some of what Mike said?
Well, I think just looking at the weather and if you look back over the last 2, 3, 4 years, I think obviously there's a lot of debate and a good debate over what might be causing it. But the reality of it is we have some things going on that we just haven't seen. I went out after the derecho event. I was out 3 times looking at the damage, and I was just stunned. I grew up on the Missouri River bottoms. We've had plenty of floods south of Omaha over the years, and that was the worst thing I had seen. But the derecho was just amazing in its impact, and really set the market off on a wild ride. It had that big of an impact, and we'd never seen that before with a any kind of wind event, hail. We'd read about it. Maybe the market would pop 3 or 4 cents, and then that would be it. So, and we had in the fall of 19, we had the slowest, or the fall of 18, we had the slowest harvest ever. In the spring of 19, we had the slowest spring ever. So it's just been one event after another, and that has to make us wonder what's going to happen this spring and this summer. It's been a while. 2012 was our last major drought, so we have to be concerned about that. At the same time, I think we've got a feel here the last few years of just how spectacular our corn and soybean yields can be if we get them in early and we get them out and we get rain in between. And we're ready for a yield explosion as well. So we're going into another growing season, and this isn't anything terribly unusual, but we have the potential to really see yields spike well above what we've seen before. And we also have the potential for another 2012 event that literally could take soybean or corn to $10 and soybeans to 20. So we have some things to deal with. What I like about this market versus certainly we were 2 years ago when Mike and I were talking and we had beans in the 9s and the corn in the 3s, is that we have the opportunity now, and we'll have for several months, to get some solid prices locked in, have the ability to participate in case the market continues to go higher. But we have a good chance here to lock in good profitability, and that's not something that we're always talking about in the middle of December.
We're going to talk about current market dynamics, and then we'll talk about the future a little bit. But have your questions ready, because we'll roam around, and if you've got marketing questions, we'll get to those as well. They're counting on some questions from you. Current market dynamics. Most recently, the volatility was partly because of a stranglehold that the Omicron variant placed on the stock market, crude oil. It spilled over into the grain markets. Now we're also talking about La Nina, and maybe that was a big plus for the soybean market yesterday, South American weather. Talk about current market impacts from various areas that you see. Mike Silver, we'll start with you.
Okay, you're right on, Andy. Yesterday, major news wires were quoting the fact that the southern hemisphere, Brazil and Argentina in particular, the weather forecasts are showing some heating up, some drying out from the impacts of La Nina. Typically in January, it gets drier in the southern hemisphere. And we have to remember that that southern hemisphere, in a production cycle in a year, raises 2 crops, corn and soybeans, unlike us up here, with the exception of, double crop soybeans on wheat. But, those 2 countries, they planted more acreage this year, and they are expecting great yields. Now, again, Mother Nature is going to have to cooperate to ensure that they get those great yields. So there is a little bit of concern now developing in the market about the impact of weather in the southern hemisphere, Brazil and Argentina. You mentioned the Omicron. From one day to another, risk on, risk off. The Omicron, there's so much we don't know, not only about COVID and Delta and the Omicron. There's just we don't know what we don't know. And when that news content becomes paramount in news wires and news stories, traders become a little bit risk averse. And what happens in a risk averse market? Prices come down. But in a 24-hour time cycle, you know, you can get enough positive news that reverses that thought process, and we get back to the fundamentals, and the fundamentals really haven't changed all that much, okay, in the last 60 to 90 days, save maybe the fact that our exports in corn and soybeans are lagging, which is definitely a factor in the market right now. It's not damaging in my opinion, but it's not allowing prices to rally maybe as much as they could if it weren't for that. Soybean meal yesterday was the leader, up about $14. And that has a lot to do with, if there are any livestock producers in the audience, you know that lysine, one of the amino acids, is in short supply globally. And you know why? Well, there's a number of reasons. COVID is one of them. Just increased usage of it. So lysine is in limited supply. And what does a livestock producer need to buy to replace lysine? Soybean meal. Okay. So that protein source, you know, they're looking for that amino acid. And I see that as being a supportive factor, and we need to watch that as we typically watch corn and soybean prices, but we need to watch that meal price as it relates to the global shortage of lysine. And if we can get soybean oil to rally, and it's been the weak sister of the complex here of late, if we could get that to rally some, I think we could see a little more price strength in soybeans. Ethanol demand. Corn grind for ethanol in the United States over the course of the last several weeks has increased week to week. And ethanol production margins are good. So corn use for ethanol is good. In fact, it's very good. And in fact, it's so good that in the January WASDE report, and by the way, does anybody in the audience know when the first WASDE report or actually it was back then, it was called the Agricultural Supply and Demand Report. Anybody know the date of the first release of that?
I'm guessing you were there to see it happen, and it was probably in 1862.
That's right. That's close.
Yeah.
Actually, it was September 17, 1973. And what event did that follow? That followed the great Russian grain robbery, when Russia came over and basically got into U.S. grain supplies and bought us out of our stocks. It's basically what happened. And Congress passed legislation that said, never again shall this happen. So now every month, before the 12th day of the month, we get what has now become the WASDE report, the World Agricultural Supply and Demand Estimate. Okay. But anyway, we get that. We'll get that report in January. And since there were no changes in the December report, save just some minor changes in the wheat balance tables, corn and soybeans flat from November, we expect that there could be some changes based on our export performance and our domestic corn grind for ethanol and our domestic soybean crush, okay, that we could see some changes that will ultimately affect ending stocks. And Andy, just another little bit of this 50-year history. You know, when I was in Purdue, we did not have these reports. And as you're all aware, you know, there's a correlation between ending stocks and price now. And that's a pretty easy relationship, and we've got historical standards for that. But I remember back in the early days of computers, you know, we did multiple variable regression analysis using hog prices, cattle prices, anything you could name to try and predict what the price is. Okay. Now, we talked about maybe using crystal balls, you know, to look at the outlook for this coming crop year. And On any given day, there can be a lot of fog develop in that. But I've come to the conclusion here of late that we might be better served, Andy, to use a Ouija board. You know, predicting price is really hard to do in the environment that we're in, because there are so many variables that we're totally unaccustomed to dealing with. But we still have to optimize our profitability and manage risk. And in my work at Kokomo Grain, that's where I focus. More in that area, managing risk, than trying to predict how high prices are going to go. I have said for decades, and I'll say it here to this group, and some of you have heard me say this before: sales at or near life of contract highs are sales that probably should be made. I've got about 50 years of history that suggests, now there's some variance to that, but suggests that once futures prices get to life of contract highs, that's probably a pretty good place to make some sales. And if you don't make them, we ought to ask ourselves, why am I not making them? And what am I expecting? And I know I'll do that multiple times with the folks that I deal with, John, in the months to come, as we have a lot of old crop that still needs to be priced from this last harvest. And we've got a whole lot of 22 crop that needs to be priced before we get to next fall.
Mike Silver with Kokomo Grain. Also here, John Zanker with Risk Management Commodities, and we're live at Grand Park in Westfield, Indiana, at the Indiana Farm Equipment and Technology Expo, a market roundtable. Any other current market dynamics that you're seeing, John?
Well, one thing I've said numerous times over the years, and certainly the last few weeks, I've been doing this for 40 years, and I haven't outsmarted the market too many times, because now, you know, in the old days, we certainly had to worry about weather in the States between April and October. Now, Brazil's growing a bigger soybean crop than we are. We have a double crop or second crop corn crop in Brazil. Obviously, China is a huge dynamic. So we have so many things going on that, and, you know, Mike's used the term risk management. That's in our company name. And I think this is a good time for that kind of strategy. My biggest concern right now is for soybeans. If South America gets through and produces a huge crop, and they're on their way to that, there is some concerns, as Mike said, about southern Brazil, eastern Argentina right now. But our export performance right now is pretty abysmal from a sales standpoint. Our shipments haven't been too bad the last several weeks, but we're well behind last year. Sales on the books right now are over 500 million below last year, and the USDA has us down 215 million from last year. So we're not, if Brazil, Argentina has a good crop, we're not going to make up that deficit. If you looked at a chart of where shipments are this year versus last year in the 5-year average. Last year, we saw a nice spike. In fact, last year, this coming week, we saw 104 million bushels exported, which was close to the record. This past week, we did 63, and that might be adjusted upward to 70. So I think in this, the report that will come out on Monday, we may see another number in the 60s. That means we've fallen another 40 million bushels behind in 1 week. And if you remember last year, Brazil got off to a slow start with their planting in Mato Grosso, their northernmost state, and that's where their double crop or their second crop corn, the biggest part of that is grown. But getting off to a slow start in planting meant a slow start to harvest. And if you looked at that shipment chart again, in January, early Feb, we saw another spike in shipments from the United States. I think that alone added $1 to the price of soybeans last year, and it probably added 70, 80 million bushels to exports. This year, that's not going to happen. The Mato Grosso crop is was off to either its fastest or second fastest start in history. They've had all kinds of rain. They're going to have a good crop. In fact, excuse me, the northernmost part of Mato Grosso will actually start cutting soybeans at the tail end of December. So my fear is our projected carryout right now is at 340. I'm concerned that in the January report that could go up by 100 million. I think the crop's a little bigger than what they told us in November, and if they drop that export number by 100, part of that could be offset by a 25 million, 30 million increase in crush. But I'll be very surprised if we don't see that carryout number in the January report go over 400, and 400 million bushel carryout is not $12 future type carryout. So on the other hand, we're not going to let soybean futures fall off much if we can keep corn and wheat prices up. I'm pretty impressed with what corn's done the last 2 weeks, given the big fall in wheat prices. So I think March corn's only a dime off its fall highs. So pretty impressive there. I like corn long term, but at the same time, if we can put a bunch of $6, if we can wrap up the current crop sales at $6 after maybe we do some minimum price activity, cover those sales with the call. Maybe that's just good money in the bank, and we walk away from it and put our full focus on this on the coming 22 crop.
You like corn long term. Follow-up question on that. Our next seminar is the Purdue experts talking about keeping that bottom line black next year. That could be a pretty challenging situation. But why do you like corn long term? Does it have something to do with next year and these input prices we're hearing about?
I think corn acres are going to be a surprise. I think they're going to be under 90 million, and we're out there kind of on our own on that right now. But I think that if you look at, we planted 93.3 last spring. 2 million of that increase came in the Dakotas, and that was due to heavy prevented plant the previous year. So you take those 2 million away, and they didn't have a very good crop up there. So North Dakota, South Dakota, not flush with a lot of cash. So they've got to be, they need to be picky with how they spend their money. And with spring wheat prices as strong as they are, soybean prices still strong, I just can't see that 2 million going back into corn. Excuse me. So that takes us down to 91.3. And I'm thinking with the surge that we've seen in input prices, I mean, the last nitrogen or ammonia that was put on this fall, I think went at 1,500. Obviously dry fertilizer prices through the roof. We've got a tar spot problem that's popping up in several areas around the Corn Belt. We're spraying fungicide twice. I mean, this is getting expensive to put out a corn crop. And so if you can we cut 1.3 million more just because we've got input prices doubling in several categories? I think the answer is yes. I know the University of Illinois just came out with 96 million, but I think if you look at, what I did last night was I took the average yield of the top 5 producing states. That would be Iowa, Illinois, Nebraska, Minnesota, and Indiana. And it wasn't a weighted average, and I came up with 194.6. So in those areas, it makes sense to stay certainly in your rotation. Maybe even if you want to be a little aggressive, maybe plant a little extra corn because, hey, there's people in this audience today that have picked a lot of 250, 60 bushel corn and then some. So, but if you take the next 5 producing states, your South Dakota, Wisconsin, Kansas, Ohio, Missouri, the average there falls to 159, and that was from this last year. And those top 5 states produce 60% of the crop. So if you drop down after that first 5, those yields start coming down. The math doesn't work near as well, and so you're putting out a lot of money. And but South Dakota, I think, averaged 137 this past year. Kansas 139. So I think the surprise is we may only put out 88, 89, and we better have a good yield if we get into that position.
Thoughts on the corn acre comments that you just heard, Mike?
I too think that corn acreage will be down from the 93 million that we planted this last year. I'm not at this point convinced that it's going to be as great a reduction as the consensus of the market right now thinks it's going to be, based on increased input costs, namely fertilizer, anything that's a derivative of natural gas, obviously anhydrous ammonia, and any other chemical that's used. I think we will see a reduction in corn acres, but I think if you look at the global balance table for corn, the message that every corn producing country and every corn producing farmer in the world is receiving is, let's plant as much corn as we can economically afford to plant. Okay, because, you know, global stocks are on the tighter side. Okay. Now, there was a lot of fall field work done this fall as folks wrapped up harvest.
This week, for that matter.
Yes.
Yesterday.
Yes. There is field activity taking place. And why is that taking place? Because the fertilizer, the chemicals, the inputs that were purchased at lower prices and they were available, okay, are being applied. So my thought is that soybean prices may not be as negatively affected as many in the trade right now think, because I don't think that the soybean acres are going to increase significantly enough, okay, to cause extreme depression in price for soybeans next year. So I'm in the crop insurance business too, and we ask our clients at this time of the year, as they report their production from last year, what their plans are, so we can get a feel for the variance from the normal rotation. And here in Indiana, you know, save for some folks that plant some wheat in the three major crops, corn, soybeans, and wheat. And we know we have other specialty crops, popcorn, and Andy, I could go that route too 50 years ago on popcorn, but I won't bore the people with that at the moment. But nonetheless, I think going into this coming year that the great acreage debate is going to continue for several more weeks, John, and probably up until sometime in early February, I would guess. You know, the transportation issues are affecting the movement of these inputs as much as the cost is affecting the potential aversion to buy those inputs at those higher prices and substitute soybean acres for them. So at a minimum, I think that's going to keep prices supported for at least the next 6 to 8 weeks. Okay. And I think that we have a chance in the new crop corn in particular to go up and challenge those contract highs that we've already posted, which really aren't that far away, you know, from life of contract highs in D's 22 corn, at which time I'm encouraging folks to sell some. Okay. Right now in our company, our open offer deck is pretty meager. Okay. Not a lot of bushels, maybe total of about 125 to 150,000 bushels across all of our locations. So folks are waiting. We're kind of in a wait and see game. And I know that every day more folks are sitting down with those budgets and trying to make that decision. How many acres of corn am I going to plant? How many acres of beans am I going to plant? And Andy, I just want to share these numbers for Indiana specifically. I know we look at the WASDE report, the World Outlook Board report, we watch that and we get the U.S. numbers, but just to affirm the latest numbers for Indiana from this last crop year, we planted 5.4 million acres of corn, 189 bushel an acre is the yield. That's 992 million bushel of corn produced in Indiana. In our soybeans, we planted 5.7 million acres of soybeans, 57 bushel an acre, Indiana state average yield. That's 324 million bushels of soybean production in Indiana. So, 5.4 million corn, 5.7 million beans in Indiana. I don't expect Indiana to change all that much. And I encourage you to stick around for this next session of the seminar here when the folks from Purdue, and I know I was in a meeting with Michael Langemeyer last week, and he has some excellent thoughts, and I know Jim Mentert and Professor Thompson will too. When we go through the numbers right now, there still is an economic advantage to planting corn from a gross income standpoint. So it's not over till it's over, and folks, it's not over yet.
Well, I think, and I agree with that, but I still look at, we have 177 currently projected for this year's crop. And yet, if you look at the top 5 states, their yield, and these aren't record yields, I don't think in any of these states, 207, 201, 190, 186, 189, and yet we have a national average of 177. So again, those next 5 states, 6 through 10, they averaged 159. So, something goes on every year around the country in all the peripheral areas that pulls that national average way below what we're seeing here, Indiana, Illinois, and Iowa. So cotton prices have been on a tear, exceptional cotton prices. We had spring September wheat at one time over $9. The alternatives, Milo, I mean, there's alternatives that I think in these the big 3I states, Nebraska, Minnesota, that's where I think we can just knock off 2 or 3 million acres. And so I think that's the surprise. Now you're also knocking those acres off in the lower producing states, lower yielding states. So the impact on national production isn't quite as high, but I think what it just does, and again, I agree that I don't think that means a sharp increase in bean acres. I think it means we're going to see some acreage increases in some of these other crops. So I just think we're in, for some, we're going to be surprised about how fast this market moves to the upside at some point. And like, we've just seen in wheat, it's like, how did we just lose $1 in wheat? Well, I was kind of surprised we added that $1 in wheat, given that our export shipments were as bad as they were. So when we get to this stage with these kind of prices, and as Mike said earlier, these are good prices, from a historical perspective. If we can get old crop corn sold at $6 after basis here, that's a good price. If we can get beans, beans in the 12s, we end up with some pretty decent yields, even with a dry August. Those are good. We're very heavily sold. I don't have many old crop beans left to sell. I've got half of my 22 crop sold, and we've got that covered with some option strategies. So we're in a position where we're pretty much guaranteed a profit if we have a good yield. And I think that's where we need to work at getting over the next 3 to 4 months.
Questions for John Zanker and Mike Silver? Anybody, any questions? Strategies or talk about what they foresee price-wise here early in the year? We've got a question. Good deal. I'm coming to you.
Will soybean oil ever go and become an airplane fuel?
We were just talking about this yesterday. in the office and just kind of joking around. And I said, you know, if I'm on a plane and I know that it's being powered by soybean, you know, a soybean oil alternative, am I as nervous as I would be if it was just the good old fashioned kerosene? And then we started talking about battery powered planes and everything else. I think the answer is yes. I think there's going to be some of that worked in. I think the future's bright for it. But you know, that's a political ball. You know, what happens in 3 years, you know, we're there's not a lot of agreement on how much money we should be putting forth into that. Um, it's, um, it's a positive right now, but we saw oil run up hard on that possibility. And then the EPA came out and said, yeah, you know, we're going to kind of keep things where we are. We're going to raise it. And then the market was kind of like, and then when oil started to fall off, fortunately, meal came up and offset it. And we haven't seen a dramatic impact on soybean price. But we've got plants going up in Kansas. We got a big plant going up in North Dakota. So I think the future's bright there. And we need it because, again, South America is going to continue to be a thorn in our side.
Other questions? We have a question.
So how much is the renewable diesel going to affect the soybean oil?
Exact amount here, Mike.
Yeah. Well, my crystal ball is really foggy on that. So if anybody has a Ouija board, we'll get that out. That's an extremely good question, the answer to which I am going to say depends more on politics than common sense. Okay. Common sense would say to me that should be elevated. Politics says that wind can blow either way, and I don't feel really good about it in the immediate future, but in the longer term, I do.
Are you saying the two don't commingle?
Not very well.
Okay.
Politics floats to the top.
Well, and one of the things that makes it even more difficult from a political perspective is it's not like the Republican Party is against it or for it, and the Democrats are inside both of those parties. There's people that want nothing, that think we should not be in any way subsidizing or supporting ethanol production or soybean diesel in both parties. And in both parties, there's people supporting it. So the winds blow, as you well know, in politics. And I'm a little bit concerned about putting too many eggs in that basket and thinking that that's going to be the only thing that or that will continue to be a supporting factor. I think it will. Again, we're going to build the plants, but when you build plants to produce oil, what do you do with the meal? We got to be able to get rid of the meal. And so that's going to continue to be a problem when South America's pretty much dominating that market now.
We've got a question over here. Yes, sir.
I'm a little concerned about the movement toward electrical vehicles, and we have so many ethanol plants out here. How hard would it be for these ethanol plants, say in 20, 30 years, to convert over to soybean production for a more viable industry if ethanol falls out?
I'm not an engineer, but I would guess that there would be quite a few dollars involved in that. And again, if you're going to produce a tremendous amount of oil and crush a tremendous amount of soybeans, what are you going to do with the byproduct, which becomes meal? And, you know, typically with 48 pounds of meal and 12 pounds of oil and 60 pounds or 11 pounds of oil, we want meal to be dominating that crush margin, but that has not been the case. I mean, it still has the majority or the biggest part of that, but not by much. I think soy oil might be 49%, 48%, something like that. So that's a concern going forward. I think the movement toward electric vehicles is real. I think it's not going backwards. We were just talking about this again yesterday too. I'd like to see, the hybrid thing not go away as fast as possible. We're talking about batteries and battery life and, duration and how far we can drive. And we don't have that problem with a hybrid. And with a hybrid, we can still run some ethanol through it too. So I'd like to see that, but there's General Motors, Ford, there's just a lot of them making a commitment to go electric. And I think that that's something that we need to be a little concerned about. It's going to hurt us down the road a little bit.
Mike?
I think it will be difficult and probably financially prohibitive for ethanol plants to convert to a soy-based product. It's different technology, different infrastructure required. It could be that the infrastructure, the footprint of an ethanol plant could be used as, with rail facilities and everything into it. A different plant could be built there, but as far as the conversion, I don't see too much hope in that happening.
Well, they did it at Logansport, but outside of the storage bins, I don't think there was too much machinery
That is correct. That's
used
absolutely
from
correct.
the old soybean plant.
Time for one more question. And it's coming from back here. Hi.
I was offered 1250 beans for next December delivery a year from now. How aggressive should I be with that?
Well, I'm 50% sold at that. So, and then I've gone into the options market and I've covered the upside in case things get crazy. 1250 beans are going to sound great if South America has a big crop. If we come back and plant 87, 88 million acres and we have a big crop, we're going to struggle to keep a 10 in front of futures, perhaps, certainly struggle to keep an 11. So we know with the good yield, we can make money at 1250 minus whatever cost of your option strategy. So that's a given. That's pretty much a given. We don't get that opportunity very often. Again, when Mike and I were talking together on stage a couple of years ago, we were hoping to keep beans above $9 and trying to figure out, do we forward price some beans at 9.25, knowing that we're not going to make money there, but it's going to be better than 8.75. So I like 1250 beans. I think the market right now, given the export situation, is overpriced. But at the same time, we're not going to take corn to $6 and beans to 11. We're not to the point where we're going to do that. So I just think it's good money in the bank, and cover yourself. We don't want a bunch of 1250 beans on if we go to 1650, and that we will in a drought. We did last year and we didn't have a big drought, or we didn't go to 1650, but we got into the 15s. So we need to we need to use some serious risk management in here. Same thing with 575. That's kind of I don't have any new crop corn sold. 575 is the point where I'm going to start taking a look at doing some new crop. And same thing there, sell it, do a call strategy. You can do a minimum price contract through the elevator, or option strategy in your own account. And then you're along for the ride in case things go crazy, but you've got a nice floor set in case things fall apart.
I will answer that question also by saying at 1250 fall delivery beans next fall, I would be a seller, maybe up to, I'm not quite as aggressive as John is at 50%, but certainly anywhere from 20 to 40%. And I would tell you this, that November 22 futures, the life of contract high is 13 3/4. And right now we are 71 cents off of that contract high. And believe it or not, the contract low, life of contract low on November 22 soybeans is $8.40, $8.40, and we're $4.73 above that life of contract low. And I'm going to go back to what I said earlier. Sales at or near contract highs, life of contract highs, in my experience, are sales that should be made. And if not, one needs to ask himself, at what price level would I be a seller? So I would say to the person that has the opportunity to sell 1250 beans now, I'd get some on the books. I'd put an offer in for some more, maybe another 10, 15, 20%, depending on what percent you sell now at 1275. And I tell you what, I've got some offers at $13 for fall 22, and I wouldn't be afraid at all to have that offer sitting in an offer deck. And if it wants to run up there and get that, get it. If we take out the life of contract highs, okay, so be it. We'd be a little late to the game when that happens to cover it with a minimum price strategy, but that certainly could be done if enough positive factors come into the marketplace that suggest that they're going to go up a couple dollars. Certainly, I would not be afraid at all to step in at any time and attach a minimum price strategy to that sale. So proceed.
Mike and John are two of our regular market analysts. We speak with John after the markets close each Monday afternoon, and his analysis is available on Hoosier Ag Today radio stations on Monday afternoon and in some cases Tuesday morning. He's always on our Tuesday morning podcast with his full commentary. So download that at your favorite podcast place. And same thing with Mike from Kokomo Grain. He is on with us on Thursday afternoons and on the Friday morning podcast. So you can always hear what they have to say, along with our other market analysts through the week. Mike Silver at Kokomo Grain, John Zanker, Risk Management Commodities in Lafayette. Thank you for joining us. You going to hang around a while
Sure.
if folks want to talk?
Sure. Be here for a little while, Andy. And
Okay.
I would say if I've got some business cards laying here on the table, feel free to take one. Every day I try to write a market commentary. It's called Silver's Comments. It's on the Kokomo Grain website. And I try to pull together all the factors that are in play in the market that day and give a little longer range outlook, like fund positions and the ethanol report, and have pretty good readership on that. So you're certainly welcome to avail yourself of that if you'd like. And feel free to call anytime. You do not have to be a Kokomo Grain customer, although I'd love that. I'll be happy to talk to anybody at any time.
And speaking, Mike, of $12.50, we'll charge that for each one of your business cards that you hand out, just so you know.
Well, that figures. Okay.
That might be
Thank,
worth it.
thank you both for joining us. We appreciate it.
Thank you.
We're live at the Indiana Farm Equipment and Technology Expo in Westfield, Indiana, and we're going to take a quick break. Coming up, Doctors Mintert, Langemeyer, and Thompson from Purdue University about the bottom line. Can it be black next year? A sneak
job,
peek.
John.
The answer is yes, but they've got some qualifiers.
I think I better listen to that.
Thank you.